Okay, welcome. Today is Thursday, December 18th. We're getting closer to Christmas. One more day this week. This is Jeff Wright with Fish Creek Capital. Thank you for joining. I'm just going to quickly go over just the daily news. We are at the market close again, not really hitting lunchtime, but that's okay. And then we'll get into the second bank stock that I mentioned on Wednesday's video. Wednesday, we did Regions Financial. So if you're interested in what that stock looks like from an investment standpoint, from a high level, again, not investment advice, just educational purposes only, go check out the Wednesday video. That'd be December 16th for Fish Creek Capital lunchtime profits. Today, we're going to look at Synovus Bank, but let's first look at the news real quickly. Today, the big news was CPI, that is the Consumer Price Index for inflation, and it did come in cooler than expected. The headline CPI was 2.7% year over year. The expectation was 3%. Down from 3% in September. Economists did expect 3 to 3.1%. So that was right there. Again, this is live and unedited. So today's number was 2.7. Core CPI, which excludes food and energy, was 2.6 year over year, which is the lowest since March 2021. And that was also expected to be 3%. So inflation is down. And so that was positive for the markets. The futures were up a lot this morning and the market looked great. Crypto was up and the S&P, NASDAQ, everything was up this morning. But by the end of the day, we really kind of sold off. It kind of in a precarious situation. Let me share my screen and we'll use the screen for the Synovus evaluation also. So let's just go there now. Okay, that should be pulling up. Let's look at, here are the S&P futures. This is for Thursday here right above me on the screen. You can see we went higher, got as high as 68.72 around 10:30. And again, I've mentioned this several times, but this is when Europe closes. I'm on Central Time. So you can see you'll often see market movement or volatility around between 10 and 11 Central Time, and that is when Europe closes. And look at that, man. We just sold right off. We bounced, and then we really were near the lows on the close. So the Dow ended up 65 points today. Let's look here. Got too many tabs going here. So yeah, let's see before. So the Dow was 65 points, S&P up 0.8%. The NASDAQ looked pretty good at 1.38%. Micron had Micron Technology, symbol MU, had positive earnings, and that's kind of what kicked off the good day for the NASDAQ. They had earnings last night. So they are a semiconductor company like NVIDIA, similar to NVIDIA, and so they had good earnings. So that really helped the NASDAQ today. We can see, I can show you again too, like for this SMH, which is a semiconductor index, it opened higher and then just really kind of went sideways, closed a little lower, up 2.36% on the day. So that's not bad there. Just one more look at the SPY for today, just so you can see this volume profile. I think it's kind of helpful just to see really how there's a lot of activity intraday, but we don't always go anywhere. So Friday, we trended down Monday, Tuesday, Wednesday. You can see it here. This was last Friday. And then today we did open up and we're back in the range from Tuesday. So a lot of back and forth. The charts for the daily and weekly, remember I mentioned them kind of being sideways. They still kind of look like sideways to down, frankly. And so that's that's where we are. So next week will be light because all the Wall Street guys will start leaving for Christmas. So I would expect volumes to start dropping next week, and we're not that many days left for the end of the year trading days. So there might not be a lot going on. We might see more of this kind of sideways to even possibly down action. I don't know. Open higher, close lower. That seems to be what we've been doing. Let's jump into the bank stocks. And so we you hear about the market being overrated or overvalued, overrated. One reason we've had 3 years now, we're going to end with double-digit gains. And so there are a lot of overvalued stocks out there. The Buffett indicator, I did a video on that. Well, you'll also hear that the banking is a place that's undervalued. And so that's what we started looking at. Some of the bank stocks. We'll looked at regions on Wednesday. So today, let's look at another bank stock, Synovus Financial, and just kind of see what it looks like. And again, we're going to go through the same tools. This is just high level. This is just a start. This is not investment advice, but hopefully this can help you see how here at Fish Creek, we start kind of at the top and look at stocks, from a high level, looking at some of these tools with CNBC, fast graphs, seeking alpha. And then if it's a stock that looks promising, then we'll dig deeper into their earnings calls and go to the company website, pull up company reports, listen to the calls, and, get a better understanding of the company and dig deeper into the financials to see what the even projections look like. So this is just high level, not investment advice. So let's jump into Synovus here, trying to keep these shorter. For the year, up 2% on the year, so has underperformed the overall market, which that would be a sign of a stock that's undervalued, which the banks, so that kind of makes sense as far as I wouldn't expect it to be up 20% with, the NASDAQ, just because you wouldn't expect that with the bank for one thing. But I'm not surprised that it's only up 2% with the expectation that these banks are undervalued right now, with the potential that they're going to do better in 2026, just with rates coming down, productivity going up, and, loans and all being more favorable. Let's look at Seeking Alpha. So I've already got Synovus pulled up right here. Again, you can go to the summary tab. Seeking Alpha is a tool I like. Tons of news and opinions, pros and cons. You can find people that love stocks, hate them. Great tool for research. So Wall Street, they've got a buy. The quant rating is a hold. Some of the factor grades here are not looking that good, really. C's, D on growth. So that's not that positive. It is in the regional bank sector, which is what we're after. So some of the analysis articles, like, you want to pay attention to the dates on these, because some of them could be older, like here, September, July, April. The more popular stocks are going to have more articles. So just pay attention to the dates. Don't assume that all these articles are necessarily, current in the sense of out this week or whatever. But you get hold, buy, hold, buy, hold. You can see there's a lot of opinions there. And then these are more news articles. Here we got a dividend declared. We like that. We'll see that, of course. Let's go there now. So we're, again, at Fish Creek, we really like growth plus dividends, especially a dividend that is growing, because, I've showed you the calculator. You can just really transform your retirement income, especially with growth dividends that are growing. And you can, if you've got a time frame, 10, 20 years out in front of you, you can really ramp up your income so that when you do retire, you don't even need to sell the stocks. You'll have income coming from the companies that you own, much like real estate or, another cash flowing asset. and it's wonderful. You talking about truly passive. That's truly passive. So that's why we like to focus on dividend growing companies, dividend growing stocks. But banks are great for that. The dividend on Synovus, it's not even rated here, so that's interesting. Their payout ratio is very low at 28%. Again, we want to be below 50% on that. Here we're seeing a 5-year growth rate of 3.74%. And the yield, we hadn't talked about the yield, the forward yield of 2.96%. So that's decent for a bank. Let's see, they'll have here on CNBC 2.99. Okay, so that's at the current price. That's what we're looking at. Let's go to dividend history. 34 years of dividend payments. And isn't that crazy? Like, these companies, you really are an owner in these companies, and they're distributing their cash flow. So that's pretty cool. Just the consistency of a 34-year dividend, seeing A grade. We don't see any growth here. So I definitely would want to dig into that. Let's see what the growth tab has on it. We've got C's coming here, D. 5-year growth rate of 3.74. 10 years, they're showing 14.51%. So I would want to dig a little deeper into that, because over here on dividend history, again, they got 0 on dividend growth, but then the growth tab, they're showing a 14% growth rate over 10 years. Like, if we can get the 10-year growth rate, that's great, because that gives us more data to project for the future. So that's why I like looking at that. Yeah, so I'd want to dig deeper into that. Looks kind of like a discrepancy there. So I don't see, again, a good payout ratio is very low. That's great. Let's go over to the valuation. So I don't know. Regions right now is looking a lot better than what I'm seeing on Synovus. Again, just at a high level. What was the Regions year-to-date return? Let's compare that even. Let's just jump over to CNBC real quickly. We need to move on here. I know this is getting longer. Year-to-date, 16% with Regions. Yeah, okay, so I thought. So that's pretty low with Synovus. They are going through a merger also right now. We would see that news down in here. We won't get into that. Let's look at fast graphs real quickly. So I've got Synovus pulled up. If you go back to the max history on the top chart, we've got an average growth rate of 1.48%. So that's terrible. Fair value of 11, of an 11.5 PE, and then a normal market is pricing it around a 14 PE on the long-term history. Let's drop down to 10 years. Okay, we are seeing it now below the fair value and below the market PE of 10. We're at a blended PE right now of 9.43. So that's positive. This is definitely where you would want to look at Synovus from a price perspective and a valuation fundamental perspective, because it would show, even if you go here at a 9.43 and we track the market's history of a 10.5, that gives us an annual return of 12.32. So that's pretty decent with the dividends included. We're seeing that 2.96 there also. All right, on the forecast with earnings, we're seeing a projected 33% return. So that's really high. But again, this growth rate is 4%. So that's really low. We're showing a fair value of $83 with the current stock price of 52. So that's where we're seeing this growth rate coming in, with earnings going up to over even 6 here for a couple of years out. So, all right. So this tells us, I think we're kind of need to wrap it up here. So Synovus is definitely cheap right now, cheaper than it's probably been in a little while. Looks like it got really cheap in 2020, which we know why. It was cheap in March of 2020. 23, it's been cheap. It was cheap. So we are on a lower end, I'd say a lower valuation end of Synovus right now. pays a decent dividend. There's potential for a good return based on earnings growth over the next couple of years for the forecasting. They don't have a very high growth rate. We didn't see, we saw the discrepancy on the history of the growth rate for the dividend. So we want to kind of look at that. I would dig deeper into that. I don't know. I think there's a lot probably better choices in the banking sector other than Synovus. So you can see what this tells us. Like Regions looked one way. Regions has performed a lot better this year, and it still was showing a pretty good forecast. Synovus shows a good forecast, but has performed terribly. So we want to kind of dig into that. So what this is telling us, even within industries, different companies are, of course, better than, other companies. So you want to not just randomly pick just a bank because it's the banking sector and we've heard that they're undervalued. You don't want to just randomly pick companies that way. So you do want to dig in, and different companies are rated differently, priced differently based on their performance and their projections and earnings growth and history, cash flow. So, it's important to know what you're investing in, and that's where we come in and want to help you. So please reach out, go to fishcreekcapital.com, click on learn more, and you can reach me that way. You can also go to the description in this video and schedule a free 30-minute call, and I can help you look at your current portfolio. You can also download a free ebook in the description below talking about dividend growth. It's an introduction to dividend growth and why we think that's a great investing strategy. So please click on those, take advantage of that, and we'll see you on the next video.